Good morning, this is Ron Brown. It's the September 20th, 2024. This week I'm starting a series of videos on Wyckoff Scans and Charts and HGS Investor. Now these are available to you if you're a member of the Insider Club. If you're not, you can always join. But what I'm going to show you is files that I've had in here for a while, but I've done some modifications, and I want to show you how this works. Now, you can see right here it says scanning for demand and supply with HGS Investor. These scans are unique to HGSI. I don't believe you can do this with any other software program. Before we get started, I want you to delete my charts and scans before updating the add-on. And of course, if you're a Insider Club member, I will send you that link in an email after this video is published. Remember, the market is your teacher. Okay, moving on, I'm just going to read this sentence like I always am required to. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you don't have HGS Investor, you should give it a try, and you can try my files also. Just go to highgrowthstock.com and you'll see the link. You can try the software for 30 days without entering your credit card number. Okay, this is what I want you to do. Go under your warehouse views, click on this is the quick pick. I'm just showing, actually I don't want the quick pick. I want to go into the choose create warehouse views, and anything with my name on it, just highlight that and click on delete. The reason I'm having you do this is because I've made some changes, and if you don't do this and you install the add-on, you're going to have some duplicates. So okay, I'll leave my experimental and the other stuff up there, and then I want you to do the same thing with the charts. This is one of the charts I'm going to be showing you and using. Just go into the choose create charting views and open that up. Shouldn't have closed it. Anything with my name on it, just delete. And then after you download the add-on, you can just go under preferences, install the add-on, and I've got it right here. Going to open this, and I'm going to rebuild my HGSI with the latest files. It just takes a couple of minutes. What takes some time are the user groups that I've added to my files, which I use and keep a historical record of some of the groups I want to follow. Now, I mentioned last week that I'm going to get rid of some of the groups and scans, the history that I don't use anymore. I just haven't gotten around to doing that yet. So I'm going to pause this while this finishes. The import is complete. I have Thinkorswim running in the background. Going to go ahead and, whoops, I'm going to have to close this. You always have to have Thinkorswim running first. And let's reopen this and see if it works. Now let's try updating the intraday. Takes about 30 seconds is all. Okay, and then I'm going to click on Warehouse, and you can see that these have all been reinstalled. My favorite daily prospecting, most of these are intraday here. These are essential, and then this is really the I guess I would call it the inventory. What I use most are these two, intraday and end of day. And I'm going to go into the essential warehouse views now. And down here under the VPA gurus, I have Wyckoff Williams and Cathar Marar, who supplied the code for the VPA, which is used in HGSI. Now, what I've based these Wyckoff demand and supply scans on, and by the way, they're also down here in the inventory, but you'll find them right here, and these are all scans which meet certain criteria that Wyckoff was looking for. Now, I'm basing this on, let me go down here to the bottom, and this is Anna Collings' book. It's probably been out at least 10 years by now. If you haven't read it, you should. It's $10 on, it may even be $5 now, I'm not sure, but it's available on Amazon. And under this chapter, there's nothing new in trading. This is where she gets into the Wyckoff criteria. The law of supply and demand is the first one. When demand is greater than supply, then prices will rise to meet this demand. And conversely, when supply is greater than demand, the prices will fall with the oversupply being absorbed as a result. The next one is the law of cause and effect. The second law states that in order to have an effect, you must first have a cause, and furthermore, the effect will be in direct proportion to the cause. In other words, a small amount of volume activity will only result in a small reaction in price. This law is applied to a number of price bars and will dictate the extent of any subsequent trend. If the cause is large, then the effect will be large. If the cause is small, then the effect will be small. And then finally, the third one is the law of effort versus result. This is Wyckoff's third law, which is similar to Newton's third law of physics. Every action must have an equal and opposite reaction. In other words, the price action on the chart must reflect the volume action below. The two should always be in harmony with one another, with the effort, which is the volume, seen as a result, which is the consequent price action. This is where, as Wyckoff taught, we start to analyze each price bar using a forensic approach to discover whether this law has been maintained. If it has, then the market is behaving as it should, and we can continue our analysis on the following bar. If not, and there is an anomaly, then we need to discover why, just like a crime scene investor established the reasons. So that's all I'm going to use this book for, but these are the Wyckoff rules, and I've based a lot of my scans on those. In fact, all of them. Now, another book, and I don't expect you to go out and buy this book. It's like a couple $100, but he discusses the Wyckoff strategy and techniques. And what I've taken from this book is down here, based upon demand and supply, and this is what he looked for, and I'm going to explain that as I get into my files. But what I've done is I have taken this information between the two books, and I have created these scans, demand scans and supply scans, and the criteria, different criteria, which we can do in HGSI. You really can't do it in any other program. And then from that, what I did is I have created a PDF for you if you're an Insider Club member, and it's Wyckoff Demand Supply Guidelines. And this information that I just showed you in the last book is right in here, and all this information is built into the scans. You don't have to memorize this stuff, but these are the Wyckoff techniques, what he looked for, what Anna looks for, and we can determine if a stock is meeting this criteria. Now, it doesn't mean that it will necessarily continue, but on that price bar, these criteria have been met. And here this is the second part of the PDF, and like I said, I'll provide a link for you. When you see these bars on a chart, it tells you what criteria in the scan are being met visually. Now here is the newsletter, which I send out, the top portion of this, and when I send it to you, the Wyckoff demand supply guidelines are linked right here, and there will be a video link above this. So that's what I'm working on right now. Now I'm not going to be able to cover everything in this video today because it'll get too long, but I want to get you started on this. So what I'm going to do is I'm going into my first scan. I'm sorry, let's see, I want to make sure that I am in Essentials. Yes, I am. Okay, so I'm in the first scan right here, and it says demand higher volume, wider spread. And if you look across here, and by the way, I am letting both ETFs and stocks through here. If you just want to see the stocks after you rebuild your industry groups, let me go ahead and do that right now. And this takes no time at all. I've got a pretty fast computer, but it's not the top of the line. It's probably 3 years old already. Anyway, those are rebuilt now. And if you're interested in stocks, just come over to the industry percentage price change. Make sure that you're at the top, and you'll see the industry groups that are up the most for the day. I don't generally use it like that. Another thing you can do, if you don't want ETFs in here, when you scan, just click on edit, and this group rank greater than or equal to 0, that lets everything in. If you want stocks only in industry groups, change that to a greater than, and you can see that it gets rid of all of the ETFs. But I'll leave it as it's shipped right now and go back to greater than or equal to. Look at this number up here. Now it's 305. Now it's 378 because the ETFs are in here too. And the reason I'm doing that is I'm looking for potential trades in ETFs in addition to stocks. Now you don't necessarily need to go into all security. And these are all things I'm going to cover in future videos. But right now, I just want to point out that higher volume, wider spread is demand. And if you look at these columns, you'll see the volume is either above average or very high or high. It's the way I've set up the filter. The spread is above average or wide. And the close is high or very high and so on. So let's just look at this. I'm going to sort on raw combo. Golden Stage Limited trades almost 1 million shares a day. Let's bring it up. Now here, this is a cheap stock. I'm going to put these in my windows. And now I'm going to go into my top-down analysis charts and go under Wyckoff VFB for Visual Filter Basic Charts. And these charts are all color-coded with Visual Filter backtest bars when they meet certain criteria. Now I want to find something better than that. That's not in an industry, by the way. So how about this one right here? It's Stockyards Bank Corp. Bring it up, and I will bring a weekly chart up too. And I'm just going to go down and do a basic white weekly chart. Okay, so what we have here is a weekly chart with VPA, and we have a Wyckoff chart. I call it a Wyckoff chart because it corresponds to the conditions that you're getting in the guideline sheet that you're going to download. Now, this right here Remember, this is yesterday. This is my scan from yesterday. And if there is a dark green bar, it meets the criteria for the demand, higher volume, wider spread. So back here in this move up, every time there is a dark green bar, it was meeting the criteria for this first scan. Now I'm going to move down to the next one. This is intraday. These are the same. This is the same filter, but it's, you can see 378, and let me go back up here, 378. So it's the same group of stocks from last night or this morning, whenever you update, but now it's looking for the stocks that are following through if they're green. So here's GDS Holdings. This occurred here. Here are the signals from last night: high, wide, and very high. And if I click on this, if you look over here at the chart, let me open this up. High, wide, and very high corresponds to these columns right here. So this was yesterday. So what's it showing us today? It's showing us that it's following through with a light green bar. Now if I refer to my sheet, that would be scan number 2. That's a wider spread on lower volume. So we have a wide spread here based upon these calculations that HGSI does for us, and volume is lighter right now. You can see that the projected volume, the magenta bar, is less than the prior days, so it meets the criteria. So here was an effort, or this is scan number 1 here. This is scan number 1. If I go to a supply chart, which is down in the next folder, you can see that there was a negative bar on here, but I'm scanning for the long side trades only right now, so that's what I'm looking at. Now the dotted line represents the industry group, and you can see that this group turned up and it's going up. And here's also a legend right up here to remind you quickly of what these colors represent, but I think it's better to refer to the sheet of paper I'm providing for you, because a few of the scans produce 2 different colors. I haven't quite figured all that out yet, but if I go back here and look at this yellow area, well, let's go back here and look at this one. If you remember, this is wider spread on lower volume, which says lack of supply. Now going back to Wyckoff's 3 rules, if there's more demand than supply, a stock will rise, and there was an effort to rise on here, and it started going up here. This is what's nice about HGSI. We can combine VPA flags with the Wyckoff information also, which I've created for this. It took a lot of work, but I actually think it works pretty well. So here is a low volume test, and at the same time you can see there's volume low, the spread is narrow, but the close is very high, and that gives us bullish sentiment. So we're getting the Wyckoff information and we're getting the VPA information at the same time. Let's zoom out on this a little bit. This is where I was right here. You can see there was some bullish up here and then bearish VPA flags that came down here. Buyers started coming back in, and then it started moving up. So whenever you click on a bar, you don't have to actually refer to the sheets that I gave you. If you click on a yellow bar, it's going to tell you the volume, the spread, and the close of that day. So if I go over here, you can see high, above average, and very high. Then as the group's going down, Here, this one's holding up at this point. It does go a little bit lower, but then there's no VPA flag here, but on this scan that I'm showing you right now, this stock would have appeared right here, and you would have been notified that the volume was above average, the spread was above average, and the close was very high. And look what happened the next day, and it started moving up from there. What I like about the chart is I can get a visual of where both the VPA signals were going off, what the group's doing, and what the Wyckoff scans are telling me. Now let me take you through some of these other charts. This is the same chart, except this is a bar chart. Some people like to use bar chart. If I go back to this, you can see there's intraday information in here. The font I see is a little bit different here. Really doesn't matter. I may change that, I may not. Now here is the same chart, but I put the 3-6 crossover and the 3-6 histogram in here for those of you who would like to see both. And this one, I put the Bollinger Bands and the Keltner Bands on here. Plus, I left the 3-6 crossover histogram in here. And finally, this is the same thing, except this is candlesticks. So number 4 is our bar chart, and those of you who like to use candles. So I'm giving you a variety of charts, and I've done the same thing on the supply side. I've just duplicated these. Whoops, I have a missing filter I have to figure out before I ship this out to you. Okay, I stopped and fixed the filter and uploaded them. They should be fine. I'll double check them again. Anyway, that's just one of many scans, and I'm going to go back to the demand side, and I'll just go down to the bottom one, which uses the Keltner and the Bollinger Bands, so we can see squeezes here, or if a stock's in a trading range and so on. But when we bring all of these together, VPA, Wyckoff, Bollinger Bands, weekly and daily charts, there's just a lot of information there to help us make good trading decisions. I especially like being able to just look at a chart and see when these Wyckoff and the VPA flags were signaling and if they're working together or not. Okay, let's take a look at, make sure this filter is applied. And I want to show you that you can sort on the days since the crossover, and if you're looking for recent crossovers, go to the down arrow and then scroll up to the top, and you can see if these on intraday are going up today and if they've crossed over. So let's see if I can find, well, here's one that's, what is this? That's it's a trust. I don't want that. Here's one that's trading at 96% of its daily range. It's down for the day. It has not crossed over. But as of yesterday, you can see the green bar for the meeting the demand requirements. And it pulled back today. It sold off a little bit. But you can see that there is a test for supply as buyers came back into this and moved it back up to the top of its daily range. Now here is one that crossed over yesterday. It's up 11 cents a day, trading at mid-range. This one right here, Apple, we know that it was up yesterday, and it crossed over yesterday on both the days since and the VPOC, and let's bring it up, and you can see that it generated the green bar, and it has a yellow bar today. Now the yellow bar, if you look right here, narrower price spread, lower volume, which means lack of supply. So let me make this full size. And you can see the projector, or the volume right now is lower than yesterday's. So if it gets to the projected volume, this signal will probably change. But it's telling us there is a follow through here. Now these charts, or these bars, only work on daily charts. They won't work on the weekly charts, because I'm just looking at this a day at a time, and that's the way they're set up. Anyway, this video is starting to get long, but I just want to point out that here is demand, higher volume, wider spread. Here's a wider spread on lower volume, which is lack of supply. Let's look at that one quickly. Sort on the raw combo. It brings the stocks up to the top that are still moving. This is an ETF. Here's a stock I'm not familiar with, but you can see that going back here, strength returning after a downtrend on that VPA, but before that, here was a hammer, and this volume was less than average, spread above average, closed very high. I didn't mean to click on that, which is one of the Wyckoff signals, and it also came down and touched the lower band and found support, and then it started moving up. And look at it now. It's got this light green, which is wider spread on lower volume. Several days of it. It's updating. Okay, I'm going to go down here. Narrow spread, lower volume, which is lack of supply. If you look at these columns right here, you can see as I go from this one, it's all green, to this one, volume is less or low. These are built into the filters. Narrow spread, lower volume, spreads below average, which means lack of supply because the close is very high. I'll just bring one up. That was right there. Today it's down a little bit. Let's see if I can find a Greenbrook Partners. This is a builder, and it is showing strength here. It's got a yellow bar in it. It's got a test today. So let's move on down. Here's narrow spread, higher volume. You can see that in the volume column. Here's the narrower spreads and the close. Right here is where the signal was given with this cyan bar. But down here you can see that it was showing accumulation using the Wyckoff techniques as I'm able to implement them in HGSI. Before this took off, this was down around a 180, and after today this is up to around, I don't know, what's the high here, or the last. The high is 246, the last is 246.53, so it's just off the high. There must have been news on this. Earnings due 11.4, so it's not earnings. Anyway, you can see that this stock was moving up under accumulation for several days, and that's a yellow bar, and that narrower price spread, lower volume, which means lack of supply. Okay, this is low supply, low volume, below average spread, high close. All that's reflected in these two columns here. Tower Semiconductor, this is intraday. And this is a yellow bar. Again, some of these bars duplicate the colors, because if the conditions are close enough, evidently, that it may generate a colored bar, which is different than what I've got in the piece of paper. Anyway, I'm confusing you. Occasionally, if you look at the sheet, you'll see it says, for example, one signal can have a couple different colors, but it's obvious when we're in the demand charts, when there is a color here, it's bullish. And where am I here? Number 5. Number 6 is high volume, below average spread, high close. You can see that's reflected in these columns right here. See if I see any ultra clean holdings I recognize. Now this stock has been in a major downtrend, as you can see, but it's also starting to show signs of accumulation. It's held support in this area, and there was a pocket pivot yesterday. It's down a little bit today, but this one could go into a watch list. This is a semiconductor manufacturer, but it's nice that we can see the visuals and also the Wyckoff conditions. I'm not going to go through all the supply side, but I'll touch on one here. Wider spread on higher volume. So you can see the high volume here and the spread is here, but the close is down. And you can see that some of these, there's no intraday quotes from Thinkorswim. So if it's blank like that, just means there isn't anything. But you can also see here that these stocks are following through to the downside, because look at the percentage down. Now, here's a familiar name. I got away from me. Plug Power, down 8.25% today. But here was the signal. Let's go to see if it shows up on the supply side, and you can see that there were 2 negative bars there, and then this follow through today on this very cheap stock. We've been waiting for that one to go for years, and it obviously is going in the other direction. I'm going to end this video here because it's getting a little bit lengthy, but I want you to play with these in the charts, see what you think. If you have any feedback, fine, but I've got a lot more to show you on this on next week when I do another video, and we're going to apply these scans to different groups to cut down on the number of stocks or ETFs. I'll go into groups that would just feature optionable stocks, things like that, CanSlim stocks, box stocks, various things. But I'll get into all that in next week's video. I hope you enjoy using these. I think they're very powerful, and I think we can get greater insight into what's happening with these stocks based upon these Wyckoff principles. Thank you for listening. Have a good weekend.